Hello, this is Tom Cloud with this week's Precious Metals Market Update. I want to jump right into a mistake that Canada is making that England made back in 2000. That is, they're selling all their gold. They're getting out of the gold reserve business at a time when the eastern part of the world, China especially, is accumulating all the gold they can in tonnage as quickly as they can. And yet Trudeau, the new Prime Minister of Canada, following his father, has taken the England rule of a path on gold, and that is to sell it right at what I think is the worst time they could possibly sell it. So this is usually an indicator that things are going to turn pretty quickly. As I've been working on my speech for March the 5th out of Spokane, Washington, I've got a lot of things that have come up, like the sales of gold eagles and silver eagles, which are just a very small part of the overall silver sales when you look at bars and other coins like maple leaves and philharmonics. And we're seeing that one day in February this year equaled a whole month last year. And we've seen gold sales by the U.S. Mint that 1 month equaled a whole year. We're starting to see unbelievable amount of money moving in. And even my company, that we've been doing this 40 years, has seen probably one of the biggest, and we're halfway through the month of February, and this will go down as one of the fifth biggest volume months we've ever had, because a lot of our institutional and money managers are moving larger percentage of gold in particular to their clients' portfolios or their portfolios. So this is something that we've got to watch and watch very quickly. The other thing that we're looking at right now is we're seeing in all these articles about the Plunge protection team ready when the stock market takes its next big dip. Here it's already dipped 12 to 15% this year, and the experts are saying we haven't even seen near what we're going to see drop in the stock market. And here's an interesting point that I hope each one of you will think about and think about and think about. Go back to 2000, the Dow was 11,800. Now it's roughly 15,800, which means it's gone up a little over 30% in over 15 years, 30% total. Gold, after rocketing up all the way to the high 1800s and now back to like 1220, is still up 450% since 2000, even including the 33% drop from the top. And now we see gold moving again. This is not to tell you you don't need any stocks. That's not the point. The point is you need just as much money in gold and silver and tangible assets as you do in equity investments that are nothing more than a piece of paper. I know that'll rile some of you up, but that's really all it is. It's a piece of paper. It gets valued on how people are feeling every day. It doesn't retain purchasing power like gold and silver have since the book of Genesis all the way up till 1971. And gold continues to perform that same pattern today. So you've got to dig into this and be ready, because you may not get many more chances before we start getting $50 and $100 jumps per day in gold, and silver 50 cents and $1 jumps in silver. Silver is still an industrial metal, and even though the ratio is up very high to 78 to 1, with gold being 78 times more expensive than silver, a lot of people are expecting that ratio to go back to near 50 times by the end of the year. So what they're really saying is if gold goes to 1,500, silver will be at 30. Gold would have moved from 1225 to 1,500, 40% or something, and silver would have moved from 15 to 30, a doubling in price. But once again, you've got to have growing economies, printing of money by China, Europe, US, and a form of quantitative easing. So watch this and watch it very closely, because this is the time you want to see this ratio change. And a lot of y'all have that speech available right after March the 5th when I give it in Spokane, Washington. And if you live in the Spokane, Washington area, uh, give us a call and we'll tell you where we're going to be for that conference on March the 5th. But hopefully today is just letting you know that the alarm is sounding. And just think, gold's already up over 12 or 13% this year, while the Dow's down 12 or 13%. You've got a 25% difference. And in my opinion, in the opinion of many experts, this is just the beginning of this big move to hard assets. And as we've talked about in the past, the East is buying and the West is selling. And once again, we've just seen that with Canada getting rid of almost all of their gold reserves. So hopefully, if you have any questions, you can give us a call at 800-247-2812. That's 800-247-2812. And Dan or Kathleen and I can walk you through. And if you want to see about getting a self-directed precious metals IRA and physical gold and silver, we'll help you walk through that also and get you set up. You can always roll it over, or if you've got the money in a bank, you can transfer it and get these precious metals bought, while we think the prices are still very low compared to where they're going to go not only this year, but also the next 2 or 3 years. And we'll talk about some of that later. With this week's Precious Metals Market Update, this is Tom Cloud signing out.